All right, good evening, everyone. Quick AV check. Y'all should see my screen here, hear my voice, and see my face. Looks like we are all set. Okay. So thank you, everyone, for being here. I am super excited to be hosting y'all tonight for this webinar. We have a huge turnout. So pumped about that. For those of you who don't know, my name is Joe Roca, Managing Director of Commodities and Equities here at Simpler Trading. Today is September 1st, 2021. And this evening, I'm going to be showing you how my system engineered 50K in 50 days, what that means, how I did it, how we want you to do it, and how you can follow along with me. So with that, let's take a look at trade right here off the bat. This was a bullish long-term trade in the NASDAQ or the NQ. These are futures trades. I bought 4 lots down here at 14,703 down here on this particular dip. At the moment when we bought this NASDAQ futures, the YM, the Dow, and the ES, the S&P, those were flying up, okay? So we've had that momentum going for us. We bought the laggard future here in the NQ, sold on a pop on day 1. Here's day 2. Here's day 3. And then finally sold our last lot up here just above the high of that day. And then we were able to catch that whole move tip to toe. And how do we do that? Well, we scaled out along our HVA and Fibonacci levels. Okay, this was a 1 to 3 risk reward trade. Risk 5K, made 15K. So this is not going to be your normal or your small nickel and dime stuff. This is going to be real trading. Okay, this is going to be the good stuff. All right, this is not your small penny stocks. We're going to be doing some big stuff here. So super excited to get a little further into this. So what are you going to discover tonight? All right, so these are proven strategies for unprecedented market conditions. The market, as you know, is making new highs all the time, day after day. And so what do we do to capture those moves? What I like to do is send out easy to follow entry and exit signals, okay? Something you can do to trade along with me to avoid those emotional trading mistakes, okay? And these are kind of no-brainer moves. Now, the trading plan that I'm going to be sharing with you and that I will show you fits multiple time frames, okay? Short-term, mid-term, long-term. And we'll go over those exact definitions here in a moment. And most notably, this does fit smaller accounts, okay? So if you've got a smaller account, you can follow along with this system by using micros. And we'll get a little further into that. And most notably, if we are trading with the proper risk reward, okay, we can capture moves in both directions, both long and short, regardless of that day's short-term trend, okay? So that's one of the things that we really like about this particular system. So since we started this mastery, we did 50K in 50 days. We moved that P&L right on up. A little pullback in August, and we're right back on top again, okay? So we're looking for consistent growth. And you'll note that it doesn't just shoot right up, come down, shoot right up, come down. It's a nice, pretty smooth earnings curve right down the middle, okay? So some of our up days, 134 grand, some of down days, 78 grand, okay? So we're not afraid to take a little risk. We're not afraid to take a step back and say, all right, we think it's going to move this direction. Let's put on these proper ratios and take this up to the top, okay? So first, a little bit about myself. I went to the University of Illinois at Urbana-Champaign, majored in engineering, industrial and enterprise systems, focused on business systems and integration and consulting. So I played soccer at U of I, went a 5th year, which allowed me to gain that extra focus there. My professional experience includes the NYMEX on the trading floor. I was a proprietary trader and also did commercial and physical trading. And now I'm here with you, wonderful people, in the educational side of things. Hobbies include soccer, yoga, and meditation. All right, so why listen to me versus other educators out there, other traders? So I've got 15 years of experience. And that includes both commercial and proprietary trading sectors. So, I kind of was raised, so to speak, in the pits, in the OTC world, trading large size, large accounts. And that's really how I built my experience up. So moved straight to Manhattan out of college when I was 23. I was on the New York Mercantile Exchange, or the NYMEX. And there I focused on commodities and crude oil. Now, since then, I've also traded indices, equities, and I've done that through futures, options, and OTC derivatives. Okay. So with this trading floor and OTC background, we feel it gives me a serious edge against most retail traders and a lot of other individuals out there kind of working their systems. And this experience here with trading OTC gives me a huge insight and knowledge of volume and how the market moves and why it moves. Okay. I've been the chief architect of algo strategies and HFT strategies. So when those bots are taking over, I once was one of those bots. So that helps me identify when we should step out of the way of some of these big moves and just cut our losses immediately, or vice versa, when we should double down and add because those algos are pushing things in our favor. Okay. And so using this volume repetition over and over and over has allowed me to discover a lot of patterns in the market. And so that pattern recognition has then driven into the technical side to prove and to initiate some of these technical entries so we can replicate these pattern recognition and these moves over time. Okay. So here's a NASDAQ example, or the NQ. We sold the NASDAQ as it broke. Okay. So a lot of times you'll have these big moves and you'll say, oh God, the market's already broke. I missed it. Right? What am I going to do? It's gone. I've got no chance. Well, we have signals designed to sell new lows or buy new highs in very specific market conditions. So that way you can still jump on that move. Okay. Even though it might seem like, oh, it looks like it's exhausted, or it looks like it's going to turn. Well, this allows us to get in that move, pull our stop loss down to break even near immediately, right? And then buy as this thing drops. And collectively, we average 977s after selling 15,000. So 15,000 versus 14,977. So averaging $2,600 on this trade in just 20 minutes. Okay, and this is called the runaway signal, and this was August 11th. Okay, so you can always go back and take a look at some of these trades and these fills, so you can get a more comprehensive picture of what was happening. All right, so for a lot of retail traders out there, we have really found that there's a great deal of mental drainage, right? You're analyzing the market, you are reading fundamentals, you're trying to figure out which tweet is actually going to move the market, and there's just a lot of variables out there. So my job is to take all of those variables, process them, and hand you an actionable signal, something that you can actually do right there, right now. So if you're tired of getting burnt out, not only monetarily, but mentally as well, this mastery is really going to help you. Okay. And again, if you're chasing the market, as I mentioned earlier, and you think, oh, I should sell this new low, but then it turns, we're going to help you with that also. Okay. Now, as the program goes on and as profits build, I can also help you size up when it's appropriate. So you can kind of get that more exponential growth. Now, what I've done so far is kept everything the same, all of the trade sizes the same, and I'm going to continue to do that here in the mastery. But I will also make note of, okay, this trade is spectacular. Consider doubling down on your own. And that's where that exponential growth can come into play. So I'm here to make everything simpler for you, right? The strike zone is here. to make you simpler so you can reinvest in yourself and have that nice work-life balance, okay? So I like this second bullet here. I will teach you how to break down the signals into a simpler fashion here at Simpler Trading, okay? So how do we enter these signals? Where do these come from? And it all comes from a checklist, okay? So in the futures market, I only focus on a few select products, okay? So I'm not looking at a long list of stocks, okay? Now I do trade stocks, I do trade options. However, during the day, I have found I'm best able to use my risk capital and leverage up in futures by only focusing on a select few products, okay? Now, if I create a trading plan that then adheres to those products and to those various timelines, be it short-term, mid-term, or long-term, that really gives us the freedom, the flexibility to manage our time properly so we're not staring at the screens all day. And if we properly then calculate that risk reward, meaning if it's a 1-to-1 risk reward ratio and we're right X% of the time, eventually we're going to make money. So this is how I've kind of grown my account. Now in the, give me one moment here, folks. My apologies. Had the balcony door open and a few sirens going by. Yep, they're coming for me. They're coming for me. All right, so our March P&L when this got started was about 9.8K. April P&L was about 19K. Moving on into May, made it 22.5K. And June was a scratch. It was a small down month, down 3.3K. Okay, so scratches are normal, right? We took a great deal of risk in June. We were real close, got snapped out of a couple really big winners, but we put it out there, right? But again, May, 22.6 thousand, April, 19,000, and then March, near 10,000 there, okay? Let's see, July, 8.7K, total P&L in the mastery right now going into the end of the month, it's 57K. So this is starting with an account with a margin of $10,000. Again, a margin of $10,000 or 10 contracts, okay? So with that margin, it's a 500% return in 5 months. And it's that simple. It's really, that's what we did. That's what we're doing, and that's what we're going to continue to do. Now, there's no guarantees, of course, but I'm going to continue to do the system that has got us here. And again, it's a max position of about 10 contracts, okay? Now, of course, the objective is to build up your account, a grand here, a grand there, so that way you can take some of those larger trades with those larger lot sizes. But this is kind of where you want to get started, okay? All right, so a signal for all seasons, what does that mean? It's an example of how my methods can be applied on multiple time frames, okay? Some people like to be in and out real quick. Some people like to have stuff overnight. Some people are uncomfortable with that. And others like to hold it for a couple of days, couple of weeks, right? So what's different about my strategy is that when we put on a trade, we know based off of the risk reward ratio I send out if it's going to be a short-term trade, a mid-term trade, or a long-term trade, okay? And what does that mean? What are the exact time frames here? So returns are realized on 3 different time frames. Time frame 1 would be an intraday trade, right? Where it's 0 minutes to 3 hours. So that could really be 0 minutes to 6 hours, give or take. It's usually in and out within normal market hours. So between 8 o'clock and 3 o'clock. Now we also do overnight trades, which would be 0 minutes to 23 hours, meaning we put it on at night in the evening, leave it there, see what happens in the morning, and then we're usually out by close of business the next day. So that way you don't have any overnight margin requirements. And time frame 3 is 0 minutes to 4 weeks. Now, lately, the market has been moving so far, so fast that 4 weeks has really been shrunk down. To be quite honest with you, It's really been like 0 minutes to like 3 days or 4 days. But we're going to start opening it up a little bit, I think, coming in September, as I've gotten a lot of feedback asking for those longer term trades. So I actually have a note about that at the end too, as we go along. Now, what are the strategies that I'm using to produce these results? Okay. So as I mentioned, I was an engineer, right? Lean manufacturing, making things simple, making a checklist, getting rid of all of the noise, and making things as smooth and efficient as possible. And that's what I've done here with these strategies and these entry methods, okay? And these are technical entry methods, right? Based off of technicals. But I would only take said trade if my fundamental view aligned with that, okay? And that's another thing that gives us a nice little edge here with this particular mastery program. Now, why is this working so well? And let's rephrase that. When does it work well? It works well with wide market ranges, check. Works well with high volume, check. And 3, works well with big swings, check. So check, check, check. There's your checklist, right? Now, if we add in these high probability setups and pair them up with economic events, trends, and fundamentals, well, now we have 6 things all going in our favor. And so we want to take advantage of those opportunities, okay? So here is a runaway signal. What's a runaway signal? It's selling a new low or buying a new high. Now, in this particular example, okay, the NQ is breaking hard, breaking fast, okay? You can see there was this swing low here, or this LOD right here. And as the market kind of retreated back to the VWAP and started to sell off, we actually sold on the way down just as it was making its new low. Now, at this particular time, the correlated markets were also breaking and were also making new lows. Now, they made new lows first, okay? So that's how we were able to jump on top of this runaway signal, sell before it made a new low, and then collect as we broke, sold back out, and collect again. Now, you will notice I bought and then sold, bought and then sold, bought and then sold. So what we do here, as you'll also see, I sold at 13,159, and then I added, okay? So I've got no problem adding to winners, and reducing our losers, okay? So if we do that, we can really take advantage of some of those moves and have the ability to buy dips, sell pops, buy dips, sell pops, and do that on the way down or vice versa on the way up, okay? Now, this trade was less than 2 hours. We got in right before the open at about, actually, it was actually more about 7 o'clock, okay? And then as the market moved, pre-open is when we started to get out. I believe this is actually in Central Time. So it was off by an hour there. But yeah, we sold as the market broke into the open and then reversed back to the top. This is another good example of us not just buying and holding in a bullish market, right? We don't want to just buy and hold all the time, and because then you're going to miss a lot of these smaller intraday moves. And by smaller, I mean $3,706, right? Nothing to sneeze at with a 3 lot here in the NASDAQ, right? All right, signal number 2 is a rebound signal. And this is a nice, smooth, very clean trade where the market was rallying, came back to the VWAP or the volume weighted average, bounced, sold 1, sold 2. Risk on this was $250. Reward was 1,000, and that's how that 1 to 4 risk reward worked out. And again, that was an upside trade. Okay, had it gone the other way, we would have lost 250. That would have been fine. We would have just waited for the next signal. Okay, this is a nice, clean trade, very smooth, very easy to follow, which is one of the reasons why I wanted to post this particular example. And these types of trades will kind of be the more, let's call it the novice signals, right? Where they're very clean, very easy to do, okay? Now, this is called a middle out signal. And what is a middle out signal? We use this signal and this technical analysis to buy or sell the market when it is currently in a somewhat of a, let's call it transitory period, i.e. it's meandering sideways, right? There's not a big upside move. There's not a big downside move. But we are of the opinion that it's going to be going somewhere. It's going to be going somewhere eventually, right? And most of this is derived from HVAs, or high volume area, which is a huge part of my trading strategy. And I will show you those HVA charts shortly as well. Okay, so here is the NASDAQ. We bought one on a low here of 722. We added the following day at 805. Third day, sold the pop. Fourth day, sold the pop. Okay. So this is how this trade worked out. That was for a total profit of $7,400. Okay. That was on 2 lots. Now, this particular trade was fairly spectacular in terms of risk reward. We were only risking $1,700 on this trade to make $7,400. Okay. Now you will notice, a lot of these examples that we pulled out are from the NQ, and one of the reasons is over the, let's say, starting March through June. I mean, I was really on top of that NQ. I mean, I was focused, and that kind of comes back to not looking at dozens and dozens of markets. If I can narrow the products down to what's working well for me, okay, and I'm recognizing these patterns, okay, and these technical indicators are jiving with my fundamental view, then I'm not going to assign risk to something else. I might as well assign the risk to a product that I've been doing well with, that I've been crushing, right? And that's a whole nother part of the system and the mastery service that you guys will find out is kind of when these alerts go out. They're usually in bunches, and they're often with similar or the same product. Okay. Now here is a fire sale signal. What's a fire sale signal? It is very similar to a squeeze. Okay, and I identify it a bit differently than others, but here we kind of take a poke at the NASDAQ here as it's getting crushed. Okay, that was right on the open there, the overnight open. Zipped down, took a poke at it, sold on a pop here, bought it back, sold on a pop, bought it back, sold. Okay, and you'll notice the risk on this is very small. Okay, because the hit ratio on these trades is pretty low. What is the hit ratio? It's success rate, right? So if you're constantly trying to guess the bottom or guess the top, and you have big stop losses, you're going to get run over time and time again, and that is really going to crush your P&L, and not to mention, it's going to hurt your hit ratio, not to mention your P&L, right? So we try and be very specific on grabbing these lows or looking to top ticket high, right? Where that's not our goal overall, but on occasion, when we have these short squeezes and these algos take over, which were some of the algos I used to write and I was the architect of, I have a good feeling and a good knowledge and background when we should and should not take these trades. And then again, when we add, right? Adding to a winner. A lot of people just will only take that first entry, and then the market's flying in their favor. Why not add, right? If you have a winning trade, why not put on more? Okay. Here is a reversal signal. Now, we bought the NQ on a pullback. Okay. Overall trend in the market is obviously bullish, without question. I don't think anyone would disagree with that, right? So we bought a pullback here in the NQ. We sold one on a pop. We bought one back because we thought it was going to continue to go. Ultimately, it broke through our stop loss. Now, losses are inevitable, hence risk reward. Okay, but what we did in this trade is we moved that stop loss up pretty close, pretty tight after we sold and bought one. right? We brought that stop loss in real tight, only lost $600 versus some of these other trades plus 3,700, plus 7,400, plus 1,000, right? Now, there are also times, of course, and I did show you one or two of these trades, but I want to show you a few more. When the market moves fast, when the market moves swiftly, okay? And here's a great example where we bought a pullback here in the NQ, sold one, bought one back, bought one back. This was a rebound trade. It comes back. It's another rebound trade, 2 in a row. Boom, 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 boom. Okay, 7,200 with a risk of 3,000. Now, this was done in less than an hour, going in both directions. Again, we're not just going to buy and hold. Here's that NQ example. Another rebound trade. The market rallies up to the VWAP, volume weighted average. EMA's crossed. Boom, we sell. EMA's crossed. Buy one, buy one, buy one. Buy them with those HVAs. Buy them with those Fibonacci levels. And that's how we capture these moves, okay? Now take a look at the signal in the lower left-hand corner, okay? This is how it worked. Sell 3 here, 944.5. So sell there. Buy one here, 882. Boom. Buy one here, 829. Boom. Buy one here, 805. Boom. So that all goes out at once. Okay, here's your stop loss. That all goes out at once. Okay, so you sell with me, put those limit orders in, put that stop loss in, and let's wait and see what happens. Now, I will help you manage that trade, of course. Best case scenario, of course, is it breaks, it moves down and breaks, and we capture those profits as it goes. But it doesn't always work out that smoothly. So when I send out this alert, I'll be helping you manage it in the event it doesn't just go straight down. Okay. So why trade futures versus options or stocks? And again, I do trade those other two vehicles, but I trade them on a longer term basis. Intraday, I found that futures are very easy to follow, especially for those of you who are a little bit newer to trading and you're looking to get your toes, dip your toes in the water. If you're familiar with options, you can trade futures. If you're familiar with stocks, you can trade futures. It also gives you leverage, liquidity, of course, as the volume is so high, lower hurdle to entry because it's margined out, and again, easy to select and manage markets. Now, what markets do I trade? I focus on the S&P, which is the ES. I focus on the Dow Jones, which is the YM. Focus on the NQ, which is the NASDAQ, the RTY, which is the Russell, and then I'll look at crude and gold as well. So these 6 futures products are what I will focus on when I'm working with you and sending out these alerts. Now, if you want to just give this a shot, okay, what you can do is follow along with a micro. What's a micro? A micro is the same contract as a future. However, it's only worth 10% of the value, right? So in the S&P, if one lot moves 1 point, you make $50. Okay. Now in the micro, if one lot moves 1 point, you make $5. Okay. So if you have, say, a small account of $500, then you can follow along with me as our trades typically have 1 to 3 lots per trade. Okay. Now, if we only have one future on, we could size up in that one, but we're not going to have 6 lots on and 6 different futures all at once, right? So you can follow along nice and easy with that small account if you want to get started, if you want to see if the process is for you. Then once you've seen those percentage returns, and if it's in your favor and you like it, you can size up, okay? So let's see, here's a testimonial. JR, I'm up $400 in the day just using one contract per trade on micros. That was a nice little testimonial there. Up 400 hours on the day just using one contract. Powell, we're right in the kisser. Very good. Here's an intraday trade in the NASDAQ. Again, on the NASDAQ, sell 3, sell another, buy one, buy one, buy one, buy one. So in my program, again, I'm going to give you these signals, all right? And let me kind of scroll back here and show you how simple they are. Again, going to be selling here. Buy 1, buy 2, buy 3. Here's your stop loss. Here's your risk. Here's your reward. Okay. Now let me go back to the example at hand. And again, this is a nice NQ or MNQ, meaning you could have done this and risked $150 with an upside reward of $446. Okay. So what indicators do I use? I use the VWAP, which is a volume weighted average. I use an EMA, which is an exponential moving average, a CCI, which is overbought or oversold, and then of course HVA market profile. So this is my baby right here, HVA. This is how I identify my support and resistance levels, and this is the basis of all of my signals. Okay, this is one of my best attributes, is picking up on support and resistance levels and scaling out properly. Okay, so as these profiles move to the right, that means there's more volume, and then a support and resistance level comes there. Okay, now here's an example of a gold trade, GC, where right up here at the top of this HVA at 1806, and then the bottom of this HVA at 1782, we sold here, let this horseshoe do its thing, and then bought down here. Okay, very simple trade. We used 2 lots on this. This was about $3,000. Okay, very, very simple trade. Now, I also sent out a note to other folks saying, hey, this is a solid signal. If you want to double down, triple down, quadruple down, consider it. Okay. Now, this was an overnight trade that we put on in the evening, came back in the morning, and that was that. And you can see we just flew back up afterwards. Okay. All right. Here's the NQ loss where we look to go ahead and sell a move back to the downside. Our stop loss was up above the high of the day. Now, that was not an accident, right? We wanted to stop ourselves out if the market made a new high and popped, right? And minimize those losses, okay, which we did. That's part of trading. Loss of 1,200. Moved right on to the next one. Okay, here's a rebound signal here in the CL where we bought 2 down here at 68.25. Bought a couple more on a break back at the VWAP, and then sold at HVA level 1, HVA level 2, HVA level 3, HVA level 4. Okay, so all of these exits are associated with those HVAs I just showed you. Okay, and let me kind of go back to that slide here. And again, this is kind of the base. This is toss, think or swim. Okay, this is Sierra chart. All right, so in the mastery, I will be sending out signals associated with all of these HVAs. Okay, so one of the things I am going to do a bit more in the mastery is kind of show these HVAs to the folks in the room and share those with you a bit more, so you have more insight and you're even more involved than just seeing the alerts. So we're going to go ahead and get that in the queue. So these are my worst 10 trades. Okay, summing up to $28,500. My worst 10 trades. Now, let's look at my top 10 trades. 66 grand. All right, so that's risk reward. That is properly managing how much you're willing to risk versus what your top reward is going to be. Okay, I hadn't even looked at this stat, to be honest with you, until we put this webinar together for you. I thought it was like maybe like 3 to 5 risk reward on those, but this is more. I mean, this is closer to 2 to 5 risk reward, top 10 versus lowest 10. And that is, I mean, that's really the concrete example of, okay, how are you properly managing your trades? Are you putting risk on at the right time, or are you trading for the sake of trading? Okay. And then here's one of those larger trades. Okay. Buying the NASDAQ, selling a pop, market coming back down here, buying more, selling, selling, selling. Now this little dip right here, we did not add. Why did we not add? We did not add because I was sitting in the conference room in Orlando when the market flushed down here. I got a text from one of our content managers, ran upstairs in my room, pulled my phone out, but by the time I did, that market had came all the way back. We had the exact same thing happen in one of our sale trades. But that's the perfect fire sale area to add. And that's actually a pretty good example of the fact that you can't catch everything, right? You're going to miss trades. You got to have that work-life balance. I was at a conference. I had to be at this conference, and I missed a trade. Am I mad about it? No. Am I annoyed? Yeah, sure. Am I going to get over it? Yes. It's not the end of the world, right? Because it's not the first time, and it's not the last time. And what's important to remember is that there's always your best trade's always in front of you, right? So my next best trade, it's going to be better than that. In theory. And I just knocked, so here comes the dog. All right. So why am I sharing my secret with you today? With the right knowledge, change is possible. My dad was my coach for 15 years. Trading and coaching. Coaching is so fulfilling for me. It's definitely one of my aptitudes here. I've helped both novice and experienced traders get results, and just trading and coaching is a real passion of mine. Okay. So what did we discover tonight? Proven strategies in any market condition, right? Bullish, bearish, neutral, volatile, slow, right? Easy to follow signals on entries and exits, right? To catch some of those big moves. And the plan that fits different time frames in almost any account size, right? And again, that array of market conditions, but we're using that proper risk reward, okay? So by using this alert service, okay, we're going to target consistent gains, all right? So I'm going to work on that mental drainage, that emotion, and take that away from you by simply providing you with, all right, this is what I'm doing, and take a peek, okay? So you don't have to be an expert to do this, right? You can start with a small account. And I'm going to help you understand my strategies kind of as you watch me trade live. The dog's barking over there. All right, so with this, I kind of want to introduce, this is kind of a last chance offer here for you folks to get into the mastery program right now and get the alerts and get the positions that I'm taking on my own. Independent, right? And get those the nice thing is, okay, you don't have to do all this by yourself. You absolutely don't. I'm going to be there with you every month, providing you with my experience, my background, my thoughts, my analysis on how to manage some of these positions. Okay, so we've covered the strategy in the webinar for sure, but I want to introduce the mastery program and how it works. Okay, so there's monthly interactive trading. Meaning once a month, we have a live day where I'm trading with you for all morning. We have real-time alerts that come out as text or pop-up messages on your phone, and then a trading spreadsheet that has all my trades, which was one of the things, one of the slides that we showed you a moment ago. Okay, so here's what it is. This is our limited early bird pricing, and what we want you to do is your opportunity to really take advantage of the strike zone method, how to do it, and to be there when I make these trades, right? Now, as always, our informal goal, and there's no promises, but is to make enough profit from these trades in each session than to pay for the mastery program. And obviously, you can see what we've done so far. Our plan is to continue doing that. And we have, of course, covered that fee a couple of times, right? So the quarterly membership for 3 months is $397. Annual membership, $1297. Okay, so prices are increasing, and this is on September 15th. So 2 weeks. That quarterly membership is jumping $200 to $597. Right now, $397. and the annual membership is jumping about 700. Okay, so those are fairly significant in the grand scheme of percentages, I suppose. But getting in at this time is really going to give you the chance to test out, learn the system at a much reduced price. Okay, now let's see. After the 15th, I've been told that these prices will not be offered again. You're also going to be grandfathered into the current price, and that's ultimately in my opinion, that's the biggest benefit of starting now. Okay, so these live trading sessions. It's usually the third Thursday of every month. Okay, and they'll start in the morning and go into lunchtime. Now, often, depending on the day, it'll go the whole day. I'll keep the room open. I'll have those alerts going out. I may not be on the mic the whole time, but it all depends on what we got done in the morning. Okay. Now, we did a live trading session in August, and we had approximately 30 plus trades. Our hit ratio was at like almost 90%. It was just absolutely uncanny. We did over 13 grand. And then we add in some of the longer term trades. It's actually 17.5. Now that was a nutty day. That was unusual, right? But the point is to follow the system, right? Regardless of kind of your view, follow the technicals, follow the system, do it again, and overall, then that's what's going to give you that consistency, right? Here's an example or a testimonial. I love you, Joe. My account really loves you. You're obviously an elite trader. What's difficult for me, and this is interesting, what's difficult for me is I have no idea why you did the trades. If you weren't here, I could not replicate them on my own. With that said, thank you for making me some money. So that was from that day when it was just insane. The market was moving fast. I was throwing out alert after alert after alert. And it was a crazy day. It was absolutely a crazy day. But the point is that I was there telling people what I did, exactly what I was doing, why I was doing it, which kind of gave everyone the ability to perhaps follow along. Okay. So this is an example of the spreadsheet that we use. Trade one, is it open or closed? What ticker? What do we start with? What do we stop with? So it gives you all the pertinent information per trade, and this says that you have access to this all the time. Now, another cool thing that they've added, which I really love within the Mastery program, is something we call the Learning Center. Okay. And in that Learning Center, there are these modules. And what is a module? It is, and here are the examples. It's defining my trading style. Okay. Trade alerts, explain time frames, etc. So there are videos that explain what's what. They are also, there's text, there's PDFs, etc. So it's not just an alert service, right? There's that learning center as well. Okay. Now let's come back to the alerts, right? Which is the kind of the main focus of this, is that they're instant. All right. I'm doing this now. I'm doing this at market price, or I got this limit order and I'm working it. Okay. And those, again, go directly to your phone. On our app, you get the pop-up message and boom, you're in with me. All right. Now let's take another look and come back at the trade alerts, how they are posted. Sell here, buy here, here, and here, and this is your stop loss, and that's it. Okay. That is the absolute basic simplicity of the program. Okay. Very easy to follow, of course. All right. You're not going to be searching through all sorts of graphs and trying to find this, that, or the other. You just have those 6 futures, and that's it. Right. You just have those 6 futures. And generally I'll have 2 or 3 positions on at a time. Rarely do we ever have something on in all 6. I suppose we would only do that if there was a huge movement in the market, or if, let's say, we were up a ton of money that day, right? And we had a lot of risk capital to to use that day. Okay. I'm not rolling risk capital over from the day before, the day before, the day before. I'm trying to keep it consistent to that day, then the week, then the month. Okay, which makes it easy for most people to scale up with these multiples of 3. That's really the best. Is once you get going, you can start scaling up. Okay, so here are actual trade alerts. Buy one NQ here, sell it here. Here's your stop loss. What is the risk? What is the signal? This is an aggressive reversal. That netted 1,400. That was with one lot. Here's a 3 lot. Buy 3 NQ at this price. Sell one here, here, and here. Here's your stop loss. It's an aggressive signal. For the risk, it's a middle out and 3,500. Okay, here's 2 gold. This was that gold one trade I was showing you earlier. Sell at this level, 1804 is cover one halfway, cover one here. Here's your stop. Moderate risk, it's a little reversal, boom. Okay, so that's how the alerts go out. It's really that simple. All right. Now, another thing I'm doing, again, for folks who really have enjoyed this, is I'm sending out more optional alerts for folks who want to take advantage of some of that overnight risk, that long-term risk, who have larger accounts, right? So if your account is, 20, 50, 100K, something of that nature, and you want to put on some additional risk, or conversely, if you don't want to do that intraday stuff and you just want to be a little bit more passive, I'll send out these optional alerts for trades that I have on. Okay. And that's something I started to do back in August, beginning of August. And then now in September, I'm going to pick that back up. Okay. I'm going to pick that back up because that was a pretty popular system for us. Okay. Now here is the member dashboard. Immediately gave access to all of the archive stuff, so the live trading session. Okay. Also, I do a video, two or three videos a month, give or take, and just kind of summarizing what's been happening, what's going on, what we're doing now. And those all come out to you as well. You can get these in the dashboard. Another thing is PayPal Credit is a great way to really invest in yourself now. And you get an opportunity to recoup your money before even having to make payment. Again, this is an opportunity to do that. Again, of course, no promises on our end. We just want you to follow along to do what is right for you. And then again, you can have this option to finance it. Okay. So again, kind of coming back to then, don't delay. Prices are increasing on September 15th. I am in a trade right now in the CL. We are working some trades up there. We are going to be putting some trades on tonight. So when this webinar is over, I will be putting on a new trade. I will be sending out a new alert. If you want to get in on that, you let me know. And go ahead and hop in at this kind of low price, if you will. I sound so silly saying that, but that's how it works, I suppose. Follow me on social media. Oh boy, I'm going to get it from you folks tomorrow, huh? JR_Strike Zone, Twitter, Instagram, and Facebook here. And with that, I'm going to take the opportunity to answer some questions. Hopefully, as I went through all of this, I was able to answer a lot of the questions for you. If you sent one over and I did not answer, now would be a good time to send a few more back in here. Let's see. Connecting says, your CL trade today paid for my quarterly itself for me. Amazing. Do I use TPO profile charts? Yeah. So Judy, TPO is the time period is synonymous with HVA, high volume, or market profile. So yes, TPO, absolutely. Okay. Let me scroll back up. Are the alerts daily? Yes. Now, they're not every single day. If it's a bad day, market conditions, work-life balance, that sort of thing. I'm not going to force a trade every single day, but on average, it's probably 1 to 4 trades a day, really. It depends on the day and depends on what's going on. But for the sake of discussion, yes. How do I learn how to put on the trades? Devang asked. So if you work with any broker, right, for instance, TopStep or Tradevate, you can get a simulated account and you get what's called a dome or depth of market ladder, and you can practice on that. Okay. And they give you, there's a million tutorial videos out there on YouTube. Each of the brokers provide them themselves, so you can do it yourself. And there's a plethora of opportunities, videos, etc. for that. So if you have additional questions, contact support, and they can point you to the right direction. So that way you can get familiar with execution and you can jump on the master. Okay. What is the different strategies between your TopStep course and the Strike Zone course? So Anthony, Anthony asks, what's different about what I'm doing here versus what I was doing in a different course that I did. And basically, Anthony, what we're looking at is I'm doing this on a longer term time frame or a shorter term time frame, right? They're not all in and out intraday, okay? We also have a different risk profile than in the TopStep. And we're also probably going to do more trades, okay? Now, if we hold trades overnight or for a day or for a few days, you can't really do that with TopStep. Now you can put it on and take it off, but that's kind of a different strategy and takes a little bit more time, okay? Now, so the simpler app worked out issues of order coming through. Okay, someone can answer Terry. Are the HVAs part of the Strike Zone class? I ultimately want to learn this on your own. Again, I'm going to be showing my HVAs. Also, I do believe, and someone can correct me, but when you purchase this course, one moment. Hey. Yeah. When you purchase this course, you should have access to all of my chart books. Okay, you should have access to all of my chart books, and with access to those, it's going to give you access to the HVAs. Okay, and you'll be able to do those HVAs on your own and replicate those. All right, let's see. So I do have a trading room, and you can log into that trading room, and then that's where those alerts come out. One account size is a good start. I would say best is 10 to 25K. Really, I would say 20 is probably where you should get going. Now you can start on micros, of course, and get familiar with the system. But I would say 20 is probably the best. Okay. Does the membership include the newsletter? No, at the moment, I believe those are separate. So Chris asks, you said max 10 contracts, so no more than 10 per trade. So usually, Chris, per trade, I would say our average max, for the sake of discussion, is 3. Okay. Now, sometimes we'll do 6 if we don't have a lot of positions on in other, right? So let's say we have 1 YM, 1 NQ, and 1 ES, right? So that's 3. Now, maybe we want to add some YM, and we'll add 5 YM. So now we'll have 6 YM, 1 ES, 1 NQ. Okay, but we try and keep the max under 10. It's like I said, it's very rare if we do that. And if that is the case, it's generally on a day when we're crushing it and we want to size up. Okay. All right, so what trading platform do I use? I'm familiar with Toss, Tradevate, and Sierra Chart. Okay. Can you trade all the products through Toss? Yes, you can. Do they have the indicators? Yes, you can. Can the approach be used through Top Step? Yes, it can. When will I be starting back up the longer term timeframes? That will be nearly immediately, Thomas. Never done futures before and don't have a futures account. Well, Mel, you can sign up for a sim account through many different brokerages and do that and trade simulated along with me with your quarterly membership, and then move over to live once you feel comfortable. Okay. Please look. How far in advance will we get the trade alert? Okay, so Troy asked a good question. How far in advance will we get the trade alert? Some of them are now market price. Some of them are later in the future, right? If the market is moving quickly and I buy now, for the sake of discussion, there's a 50-50 chance it goes up or it goes down, right? So if you get in a little late, you might get in at a better price. You might get in at a worse price. But the objective, of course, is to find something that's not flying around too fast. Today, I wanted to put on a few trades, and then I sent out alerts saying, you know what, cancel that previous alert. Market was just moving too fast. Okay. Now, on the live trading days, that's when, boy, we're going to do everything. We are going to do everything. Okay. So the indicators you do not need to purchase, believe they come with the class. Trade alerts per week, probably 5 to 10. It depends on the week, but we're not just doing 1 to 3 trades a week. There is going to be a lot. Okay. So if you're following with stocks but not futures, you can, of course, get wind of my direction. That would be very valuable, is kind of see, all right, what is Joe's read? What is his play on direction right now? And is he long or is he short? Okay, and if I'm long the ES, the NQ, the YM, and the Russell, but you're short a bunch of stocks, well, that might not really work out well for one of us, right? But if you want to know what I'm up to, then that would, in fact, be very helpful. Okay, what happened to Leo? He's back. He wasn't coming earlier. Okay. How do I keep the notifications on my desktop? Someone could help you there. Can you just trade intraday? Yes, Michael, you can just trade intraday. Absolutely. You saw a lot of those examples were intraday, right? Some people only take the intraday ones. Some people only take the long ones, the longer term ones. So it's really up to you. Okay. All right. Have I seen someone build the HV chart on TradingView? I have not. Let's see. If futures we have a Infinity Ninja Trader, David asks. Yes, it will, David. That'll work out. Ninja, yeah, that'll work out. That'll work out. Are there enough trades? Yes. Increasing prices because the value has increased of the system after the proof. Okay, let's see. Do I trade live? Yes, I do. Do I share my screen? Often. I do. What are the times of day or evening do I trade most? I would say in the evening between 6 and 9, and then the day between 8 and 11. Okay. Let's see. Is 25K enough? It should be. I'm not familiar with TOS, but that should work with TOS, yes. How long does it take to sign up and access? I believe it is immediate. Okay. What's the difference between this and the live trading room? So, Rob, here I send out written alerts always. In the live trading room, there really aren't any live written alerts anymore. A lot of them are verbal, but here it's an alert that goes right to your phone. Okay. Do you need to subscribe to the futures room? No, you do not. This is just with me and Leo here. Okay. So All right. So, folks, again, I am so excited to be in this with you. I'm just absolutely thrilled that we had the opportunity to talk about this today, and we're gonna get right after it in a moment here and put some trades on. I do believe, so I'll send those out in a little bit and send out the CL trade we have on at the moment. And we could actually do some YM also. We could do a nice one lot. So, okay, I got some ideas on stuff I'm going to be sending out in a moment. But boy, thanks all for being here. I had a spectacular time. You guys have been great. Join now before the prices increase on September 15th. Comments, questions, concerns, please shoot us an email, support@simplertrading.com or leo@simplertrading.com. We should get him an email address. Okay. So with that, I look forward to seeing you guys. Have a wonderful evening. Lots of love. And as always, have a profitable day. Bye, folks.